Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
If you watch our videos, you probably realize we're not at the same place where we film like 90% of our videos.
Right.
So we're doing a little traveling, but while we're on the road, we want to make sure we keep you guys updated. And of course, we spend like a lot of the day reading articles, and we came across this one we thought was pretty interesting. It's the 10 most competitive and least competitive markets. Okay. So it's the 10 markets where home prices have gone up the most, people are overbidding, and then the 10 worst. So you probably, first thing you should do is guess, is your market in the top 10? So you should go in the comments and say, hey, I'm in blank, and I think I'm in one of the top 10s.
And while you're in there, make sure that you subscribe, hit the notification bell, and like the video.
Okay. All right. So we're going to put up the first slide. 10 most competitive markets. Now, if you look at this slide, on the left-hand column, you have the market area. And then that first column there is percent of homes above list, sold above list price. So you have April of last year, and then you have March and April of this year. So you can see, we'll start with the top. San Francisco, Oakland, San Jose, that's the Bay Area basically. So 73% of homes sold above list price last year. It's even hotter this year, 82% in April year over year. And then what's really crazy is average paid above list price. So last year it was 102,000, and in March it was 207,000, and April was 190,000, 200,000 over list price. So that's like, we think that's crazy, right?
It is. It is. The thing to keep in mind, though, that these numbers are kind of backward looking, right? Because they're looking at when homes closed, right? But remember, homes came on the market maybe a couple months before that. They were in escrow and then they closed. So when did that really transpire? So probably transpired somewhere around 30 days or so before closing, right? So these are a little bit backward looking. We're not completely living in a bubble, even though we're not in our usual location. We do understand what's happening with the market out there right now, as far as all the uncertainty, the rising interest rates, people living off of debt. We are very, very aware of that. But these numbers are still numbers worth looking at, because it's going to take a lot to change this trend. Even if this trend tapers off, it'll be over time.
So we're going to run through these really quick. Of course, Denver, we know Colorado's the state people, or San Diego, those are the LA people who left LA. Boston, Manchester, New Hampshire, it's one metro area. It's not really one metro area. They're an hour plus apart, but it's just that area, because it's all contiguous. It's all connected pretty much through the area. Los Angeles, just because it's Los Angeles. Sacramento, these were all the San Francisco people who left. We did a whole video on that. Colorado Springs, Pueblo, Hartford, New Haven, these are the people who left New York City. Austin, Texas. So you're probably like, where's Miami? Why is it Miami in here? Well, it's because you had to get like 60% of the homes over list price. It might have been like 59, which is still a lot. Now, but what's interesting is what's not in here is New York City. And then, as you can see, most of these are cities there was net outflow. But what this doesn't show is that San Francisco, Oakland, San Jose, there are markets within the market. So if you live in the city and you want to get out of the city because maybe you were living in downtown and you didn't like it there anymore, and you went out to Oakland or you went out to Burlingame, that's all in this data. So people who are renting, who are going out to buy now, it's a demographic shift, right?
Right. And remember, there are people now who are in the buyer market that maybe were not going to be buyers, but they're looking at interest rates going up and they're thinking, I'm catching the last train out of here. This is my last opportunity to buy before interest rates make it so completely unaffordable for me. So there's a lot of that going on too, that fear of missing out. And
I'll say this about interest rates, is we never know exactly what the effect is going to be psychologically. Not the actual effect of rates being higher, but how people make decisions based on that. Because remember, interest rates could turn and go back down again if the economy starts shrinking and the Fed starts trying to increase the money supply and try to make the interest rates will drop again, and then you may get people refining, and the houses people are buying now will become more affordable effectively. Anyway, we'll go to the next one. These are the 10 least competitive markets. Now, these are larger metro areas. They didn't pick, Winnemucca, Nevada is a least competitive market. What's interesting about this is that if you look at 10 from the bottom, so the 10th worst, not the worst. It's 42% of the homes sold above list price.
So,
and that's one of the worst, least competitive, only 42%.
Right. So that means that if you're in a bad market, you have a 42% chance of your home selling over list price, which means that you're still kicking butt. So congratulations.
Another interesting thing about these markets is you look at this is that a lot of these are those Florida markets in Texas. And you're like, wait, I thought those were hot areas. Okay, well, this is potentially why. A lot of people left during 2020 and left in 2021. So you had that rush of people in 2021. It's still kind of a hot market because 42% of homes selling over list price is pretty hot. When historically, the sale price to list price is 97.3 or something like that. It's under 100%, right?
Right. So what Todd's saying is that historically, if you list your house for $100,000, you'll get $97,000 for it. So the fact that if you list your house for $100,000 now, you're gonna get more for it. That's what makes it a hot market.
And that's a historic vanity thing because nobody wants to list low. Everyone thinks their house is great, so they always tell the agent, "Oh, can we just put 5,000, 10,000 more on there and see if we get it?" Okay, sure. Well, why don't we just make it $1 million more and maybe we'll get that, right? Maybe somebody. That's my favorite one is people would say, "Well, what about those Californians? They may not realize that this isn't California. They may pay $1 million for my $200,000 house." Well, probably they will. I mean, they probably aren't going to just look at just your house. They'll probably go like, "Why is this house $1 million? This house $200,000?"
Right.
So, but you remember this could resemble that there represent that in April of last year there was this massive influx, and then there's less now because this is just year over year. This isn't paint a long picture, but even like the worst market. Doesn't look extremely terrible. 9% of homes sold over list price. Average paid above list price was basically it was zero. It was they basically paying list price. That's Norfolk. It's a Navy town. There's a big naval base there, so it doesn't really have a lot of Fort Myers, of course, Fort Lauderdale, Miami. You're probably asking, well, why isn't this a super hot market? Well, it was a year ago. And that's what this represents. Now, keep in mind the other thing, too, is that rents in Miami are off the chart.
Right. So, the rental market is still hot. People are still moving around. There's still a lot of that going on. And what these numbers are showing is that the real estate market is still strong. Now, how long is it going to stay strong for? We don't know. Like I said, we're not in a bubble. We do understand what's going on out there. But these numbers that are looking back really a couple months are showing a very robust real estate market with sellers still confidently in the driver's seat.
Yeah, so we thought this was interesting enough that we would make a video and share it with you. Top 10, at least 10 competitive markets based on all that. You probably noticed Vegas wasn't in here. It's got to be like 11. It's got to be number 11 because our Las Vegas market is still smoking hot. Every listing we get gets offers. Every buyer offer that we've written or anyone on our team has written is immediately competing with a bunch of people.
Right.
We still get phone calls, 15 minutes after putting a property in the MLS. Do you have offers yet?
Right.
Like, we just put it in 15 minutes ago.
Well, and the other thing that's happening, and it's been happening for some time, you put a house on the market, it sells for over list price, and while you're in escrow, during the escrow period, that house will go up, 3-4%, 5% in value during the escrow period. So that means that when that buyer closes escrow, they're actually closing with equity.
Yeah. Anyway, we thought we'd share this. Please subscribe, hit the notification bell, leave us your comments, and we will see you on the next video.
Bye.
Bye.